Welcome back to our Watching Corporate Eye. Let's just focus to another counter that has reported earnings. You have a PNB Housing Finance. Let's see what the stock is doing as we speak in today's trading session. Overall, if you go to see, it has been a pretty strong quarter. There you go, gains. Currently, if you go to see, gains of around 24 points coming on the counter, pretty much in the positive. In fact, let's decode the earnings with Sanjaya Gupta, the MD at PNB Housing Finance. Good morning, Mr. Gupta. Firstly, congratulations on the spectacular set of numbers. As we know, it has been a pretty good quarter. Firstly, if you could just tell us what's the outlook going ahead. Do you expect to maintain this kind of a momentum in the fourth quarter of FY17 as well as if you talk about the first quarter of FY18?
See, what has been going strong for us is our people, processes, technology and our brand, and our concentration on mass housing rather than top of the pyramid. So basically we target, Meera, where the sort of demographic dome bulges, and that has been giving us rich dividends when it comes to our growth story from the last 24 quarters. Going forward, we are going to maintain our vision and our strategy, and we are going to expand in tier 2, tier 3 cities where more of mass housing is popular, and I think we will have healthy growth rates. I cannot be giving you forward statements. It's a listed entity, but let me assure you we are doing everything to sort of address the requirement of mass housing or the generic sort of demand, inherent demand, which is there in the Indian market.
Right. Mr. Gupta, earlier when we spoke to you during the IPO time as well, you did mention that you were expecting to sustain the loan growth at around 40% on a year-on-year basis. If you could just tell us how is that panned out and what's the outlook?
Well, as I said, future statements I do not want to make for a listed company. But as I said, our basically growth story is now dependent on our geographical expansion, our our branch network, and we are having 58 branches which are fully operational, backed by 18 underwriting hubs, decision-making fountainheads. And in the future also we will expand pretty, I would say, aggressively into tier 2, tier 3 cities. This year we have opened 11 branches. We are planning to open 7 more in quarter 4. Going forward in 17-18 also, our distribution network is going to expand hugely.
As you mentioned about the key geographies that you have been operating in, you have mentioned that the company is already targeting at least 10% market share immediately in new geographies where you've already begun operations, and then scale it up, in terms of presence gradually. What is your current market share in the geographies where you've already begun operations?
Well, basically in the last 9 months, if you were to take, the business contribution by our new branches, which are about 11 odd, it has been a good 7 to 8% in the incremental business, and they have now stabilized, or most of them have stabilized, a few of them are stabilizing, and I think their contribution will keep on growing in the incremental business.
Talking about where spreads are concerned, PNB has been enjoying cost advantage, currently 2.17% in the first half of FY17. How have spreads panned out currently if you talk about Q3?
Well, the spreads have actually bettered a little bit, and primarily that is because of the capital infusion. They are back to about 2.10%. They had gone down to about 2.07%. And I think as more and more gearing and more sort of borrowings we will be doing in the debt market, our spreads will be improving because we will get the benefit of incremental costs.
Right. Talking about where asset quality is concerned, overall, as we know, there are 2 collection cycles for PNB, the 15th and the 10th of every month. Post demonetization, there are analysts in their reports suggesting that the check bounce ratio has shot up to almost 2 times for a PNB Housing Finance. However, even the management has stated to them saying that the bounced EMIs are mostly in the non-salaried segment and they've subsequently been resolved. Any update on that?
Well, one is that I don't know from where you have picked up these details, but certainly the November bounce rates of EMIs were far higher than our average bounce rates. So basically our bounce rates are in the vicinity of about 1.37%. They had risen to about 2.5% in November, and they got normalized in December, and we are expecting that we will maintain the quality of our repayments as as a business as usual activity, and our quality of portfolio will certainly sustain the vagaries of macroeconomic scenario.
And lastly, if you talk about where cost of borrowing is concerned, that has come down to almost 8.81% from 9.66% that we saw in 2014. Do we expect any further improvement if you talk of cost of borrowings?
See, what has happened is between the IPO, which happened on 7th of November till 31st of December, we have not borrowed in the market because we had capital infusion, plus from securitization we got 3,300 something crores. So we utilized that. Now, going forward, you will start seeing us very active in the bond market, etc., and fresh borrowings will get us lower rates, and I'm sure we will be the darling of the debt market also.
Right. All right, Mr. Gupta, thank you for speaking to BTVi and sharing the details as well, and congratulations once again for the spectacular set of numbers that we have seen in terms of three-quarter. And as Mr. Gupta mentioned, impact of demonetization was there if you talk about the beginning of November as well as a little bit in terms of December. However, subsequently is expecting things to improve, and the numbers have been pretty strong. Stock also seeing gains to the tune of almost 2.9% as we speak. In fact, another counter that has been